Hello and a very good morning to everyone. My name is Eric from IDC's Tech Investor team, and I will be moderating today's webinar on our 2024 Semiconductor Market Outlook. It's great to see so many of you join us today in what is a very volatile yet opportune time for the markets. We have with us Mario Morales, who is IDC's Group Vice President in Enabling Technologies and Semiconductors. Mario is a leading advisor and expert analyst for IDC's largest Wall Street clients, including investment banks, VCs, and mutual funds and hedge funds across every major financial region. He has over 25 years of experience running in-depth analysis and research of major semiconductor segments such as embedded and intelligent systems, wireless, PC, networking and cloud infrastructure, automotive electronics, and AI semiconductors. Mario has established relationships with technology suppliers including Intel, Samsung, TSMC, Qualcomm, Huawei, AMD, NVIDIA, Microsoft, and more. So before we start today's presentation, a few housekeeping reminders. Today's call will last for approximately 1 hour, with the first 45 minutes for the presentation and the remaining 10 to 15 minutes for Q&A. By default, your audio and video have been disabled. However, you can and are encouraged to share your questions using the Q&A widget on the left side of your screen. If you encounter any technical issues, please try refreshing your browser, or alternatively, try re-logging into the platform with your registered email. So with that said, over to you, Mario.
Thank you very much, Eric. I appreciate the introduction, and welcome everyone. Thank you, and good morning and good afternoon and evening for those folks outside of Asia Pacific. I want to just give you a quick purview of what the agenda is for today. My goal is to give you what our current outlook is on the semiconductor market. I'll talk in depth about certain sectors of the space where we're seeing tremendous amount of growth. But clearly, what is clear overall is that we're at the start of a recovery in the overall market after the long market correction of about 20 months or so. So as we look at the first slide is really just to give you a quick illustration of the fact that we do believe that the second half of 2023 really marked the end of the long inventory correction that we had been undergoing. And we started finally seeing some of the traditional markets, and I call them traditional because they typically have been the largest growing sectors and the largest markets from a revenue standpoint for semiconductors, and that's the PC and the smartphone area. Those two key markets have gone a very lengthy period of correction and lower demand. But as we started closing out the year, we began to see some stabilization in those markets and more of a balance of overall supply and demand. We've seen since probably August, September timeframe of last year, we've continued to see memory prices improve. And a lot of that really comes from the fact that suppliers are focusing on improving their operating model so they can get back to profitability targets that they have internally for each company. But what the goal is for these companies is really to get back to a point where they're going to be able to generate the same gross margins that they had back in 2021 and 2022 when we were up in the cycle that we experienced due to the pandemic. We think that the unit volumes in PCs and smartphones will continue to stabilize, as I mentioned earlier, but we are encouraged by the new architectures that are beginning to drive a lot more awareness and I think the eventual adoption of AI. In fact, we were just at MWC last week, and you could see by the introduction of many of the flagship phones, they were all touting the latest and greatest, not only GPUs and CPUs, but also the next generation of NPUs or neural processing units that were all really focused on driving specific AI models into the devices themselves. And we think this is going to be something that begins to ramp in the second half of this year and really accelerates as we go into 2025. We think that the U.S. economy remains resilient, at least from what we expect that we saw for most of last year, and even what we expect for the first half of this year. Although there are definitely some concerns around a potential recession, and we seem to be pushing that out as we go along each quarter, but we do see some slowdown in certain periods of time, with exceptions to the ICT spending space, where we're still seeing very strategic investments in replacing existing infrastructure, but also investing heavily in building strategies around AI across their entire organization. We think that enterprise IT spending will also remain on track as we go into 2024 and 2025, and it will encourage a replacement cycle in those periods of time. And all this really bodes well with our outlook. We're reiterating our growth expectations of about 20% from a revenue standpoint for this year for the overall semiconductor market. So if you look at our outlook and you look at our previous forecast and compare it to our current forecast, we've increased the 2027 number by about 6.7% from our previous forecast. So definitely the next couple years, we're expecting double-digit growth for the semiconductor market. And even though as we go into 26 and 27, we start seeing a leveling off of the space, we do expect that the market will then again return to growth as we get closer to the end of the decade. And what's very clear now is that we're going to continue to see very long-term investments in order to drive scale, not just at the leading edge, but also in mainstream and mature nodes, because we need to continue to ensure a stable supply chain, but at the same time, there's this push towards technology sovereignty that is driving the forecast period and driving the numbers higher, especially when we see investments in chip acts from across every major region. We think that billions of connected devices at the edge will continue to double in volume during our forecast period of time. And what's important to point out about this is that this will drive a large part of the data that will eventually drive AI inferencing at the edge and at endpoints. And so we believe fundamentally that as we look at AI and as AI continues to proliferate across the markets that we're tracking, AI inferencing will actually be larger than what we've already seen in training within the data center and infrastructure. And we think that bodes well for the outlook of the market on a longer term basis. Enabling technologies, a lot of the concentration of attention today is really going to the GPU and really compute in general. But we're going to see also areas like memory and sensors, high performance analog, power, optical, and RF. These markets are also going to benefit from the growth of more semiconductor content, from the growth of many industries becoming more digital in their operations. And at the same time, this convergence that we continue to see between the ICT world and also the operational technology industries that are both very large industries will continue to drive a lot more semiconductor content moving forward. So a lot of the growth that we believe is in the market is definitely sustainable, at least over the next 5 to 7 years. We think that next generation computing architectures, some of them already introduced that are enabling AI PCs, from companies like AMD and Intel, and also Apple. But by the middle of this year, you're going to see the rollout of what we believe is the true differentiating AI PCs, which will really carry NPUs with the capability of 40 or more TOPS in order to address some of the language models, the large language models that we're going to be integrating directly on each device. And so we think that the infusion of AI will begin to start a replacement cycle that's been long overdue. Since the last replacement cycle we've experienced was back in 2020, we're now 4 years into the existing infrastructure that we see today, and we believe that we're going to begin to see some momentum later this year, and it really accelerates in 2025 for both smartphones and PCs. And so as we look at these two spaces, we believe that smartphones will grow between 3 to 4% on a unit volume basis. So we're going to look to about 1.2 billion units of smartphones for this year, while PCs will grow to about 260 million PCs overall. So that's a growth of about 3.4%, and it'll accelerate growing faster in 2025. So as we look at and summarize our forecast, I wanted to just point out that we're reiterating our forecast that we've been consistent on since probably August or September of last year, but we believe that the market will grow about 20%, led by the rebound in the adjustments that we've seen in inventory, but also the rebound in memory, and at the same time, this tremendous amount of growth that we're seeing in the data center, and at the same time in clients as they continue to bring out new products that incorporate AI engines within them. So our forecast is 20% this year, and as we look out and get closer to the end of the decade, we expect that by 2029, we'll start getting closer to $1 trillion in annual revenues, but we really surpass the $1 trillion mark sometime in 2032. And a lot of that will be driven by on-device AI. We think that computing infrastructure, both in the data center but also in network infrastructure, will continue to grow throughout our forecast period. And the automotive industry, which has taken a backseat after a pretty strong growth this past year due to elevated inventories, will return. We think the long-term trends still remain very positive for automotive, and we think that the semiconductor content will continue to grow in vehicles overall. And in areas like memory, the DRAM market will definitely experience the most growth in the data center as we continue to see a lot more adoption of these higher bandwidth memories that go alongside the AI accelerators and the AI silicon that you're seeing within data centers and also within network infrastructure. So just a quick snapshot on the macroeconomic and industry data that we're looking at to shape our forecast. As you can see, this chart here shows the semiconductor market and the global outlook for GDP and IT spending. And as you can see, if you look at the black line, you can see that we're expecting a couple double-digit years of growth for the semiconductor market as we continue to see an improvement in IT spending compared to what happened in 23. We do see companies still prioritizing and investing a lot more in AI-specific optimizations and workloads and use cases that will continue to drive a good amount of IT spending overall. And the real GDP numbers, we're expecting about 2% global GDP growth, and it remains pretty steady, which bodes well, I think, for the outlook of the overall semiconductor market. This next slide is really looking at global industrial production, and it comes from the World Trade Monitor. And as you can see, we continue to see a gradual improvement in production overall, which again is a good sign overall from a macro standpoint. Looking at the business confidence, again, we're seeing a gradual improvement in the confidence of U.S. business, which I think is also a good sign for the perspective that we have in terms of our outlook for this year and our longer-term view of the market. And this is data from the global SIA or WSTS data, which is a trade organization, and we use it as a reference point because they are tracking the market in terms of billings on a monthly level basis. And you can see that as we closed out the year, we were growing on a year-over-year basis by 11.6% as an industry. As we look at the data for January, the number grew to about 15%, which is a lot more consistent to the growth outlook that we're expecting for this year. So getting a little bit more into the forecast itself, the following slide is a quick snapshot of our outlook of 2024. What you can see from this is that the data center and the client space this year will gain a lot more share because we expect faster growth in this area. We expect a lot more semiconductor content to go into this space. And we also see the storage industry as a whole continue to rebound, which will also help the semiconductor content overall. When you think about smartphones and you look specifically at 5G, 5G alone drives about 20% of the total semiconductor market. So even though we've had a pretty long correction in the mobile phone space, the 5G industry and the smartphone industry continues and remains one of the largest sectors in the market. And what we've done is we incorporated the smartphone and the PC into the category we call primary client. And so that the combination of those two markets are about $212 billion in size and account for about more than a third of the total semiconductor market as a whole. If you look at some of the other spaces, you look at automotive, we've seen pretty dramatic growth in the last couple of years in the automotive space, and our expectations are that automotive will will equal about 72 billion in terms of the overall TAM for the space, or representing about 11.4%. Communication is primarily network infrastructure and wireless infrastructure, and the combined market is about 61.1 billion, growing. Our expectations that it will recover, even though we're seeing patches of inventory correction there. We do expect it to recover. There are some pockets like fixed wireless access and broadband equipment that are seeing really solid growth. And when you think about the communication that is going inside the data centers, that area is also growing very dramatically. And even the communications technology that goes near the servers themselves also will show very solid signs of growth. You can see it in companies' numbers like NVIDIA and Broadcom and even Intel as well. But this segment will account for about 10% of the market. IoT is about 135.2 billion, and it includes consumer electronics in that space, the smart home area, and I'll provide more details later, and also some of the industrial sectors that are driving IoT, and that market represents or accounts for about 21.5% of the total market. So this is just a quick snapshot, and the next slide is really meant to provide you with our longer term view of the market. As you can see here, this is our 5-year forecast here, and we expect that the CAGR for the market overall will grow above 6% over the next 5 years. And if you look at this market, we're expecting not just 20% growth this year, but another 14.4% growth in 2025. And a lot of that growth is really the strong recovery that we're expecting in memory, where last year we saw a decline of about 36.4% for the memory market. That primarily is DRAM and NAND, but we're expecting a very strong jump of about 57.3% this year. So you're looking at a memory space that recovers pretty strongly at about 143 billion for this year. And on a longer term basis, we see the market begin to sort of start peaking before the next cycle in 26 and 27 and 28. But by 2027, the total market will be up to about 804.5 billion in size. Looking at this space and excluding memory, I think it's very important to show you the outlook of the space without memory, and you can sort of see that even during the period of correction last year, the overall market, excluding memory, only declined about 4.4% versus the total market decline of about 12%. And you can sort of see a pretty steady recovery over the next couple of years for many of the different areas and components. I think that you look at application-specific area, which is the largest sector, that includes not only ASSPs, but it also includes ASICs. And so you'll find GPUs in this number, you'll find products that go specifically into communications infrastructure, like ASICs, or even some of the products that are being designed and developed by large system companies like Tesla or Cisco or Lenovo or Huawei and so forth. That will fall under the application-specific category. In that area, we expect to accelerate to about 15.7% growth in this year and 16.1% in 25. The analog area is an interesting space. Typically, the analog market grows about 5 to 7% on a normal cadence basis, and we do expect that level of growth this year. But there is elevation of inventory in this space, especially in areas like industrial and automotive, that you're going to see have to be corrected over the next couple of quarters. But we do expect the analog market to recover as we go into the second half of the year, and then accelerate some growth of 10% in 2025, especially in areas like power management or high performance analog spaces where you're seeing the need and requirements for higher voltage. We look at the discretes and sensors and actuator areas, and those areas will also continue to grow at a pretty steady pace in double digits as we get to 2025. But there's definitely a lot of shift in technologies in that area, not only because we're adding a lot more sensors across multiple systems, but we're using different technologies in the power area that will drive a lot more innovation in this market moving forward. So as you look at this market and you exclude memory, by 2027, this industry is about 636 billion in size. So pretty good sized market excluding memory. Now, I've talked about this in the past where I wanted to show some of the key sectors in the market and where we see them growing. If you look at the CAGR for the market from 22 to 2027, we're expecting that the total semiconductor market will grow about 6.9% over that given period. But mobile phones are going to see a return to some growth. Even though the market is a lot more saturated with 5G, there are still pockets like India and Indonesia, and you look at Latin America, who has just begun issuing licenses, that will drive some of this growth. But the fundamental growth that we see driving areas like mobile phone and data center and IoT and even automotive is really the fact that we're still seeing a lot more semiconductor content go into these market segments. And I wanted to point this out because even when we exclude memory, some of these markets begin to reach $100 billion in size on their own. So, today, when you look at the $100 billion markets, it's really PCs and smartphones. But over the next 5 years, mobile, the data center quickly is going to surpass and become the largest sector overall for the semiconductor market. But even areas like IoT and automotive and industrial will reach over $100 billion on an annual cadence through our revenue period or our forecast period that we're showing here. If you look at some of the market from an application or market perspective, you can sort of see what occurred in 2023. There weren't too many markets that were growing, with exception to the automotive space, and the server domain grew very nicely because of NVIDIA, because of what we were starting to see, which is a shift from general purpose server demand to AI specific server demand, or what people call accelerated computing servers. And we saw dramatic growth there. And also game consoles were finishing off a good life cycle that they've had, growing at about 8%. But as we look at this year and as we look at 2025, many of these markets are recovering. In some cases, the server area will continue to show the strength that we saw last year, and that will continue into 24 and 25. We do expect 5G phones to add a lot more content in this space, especially as we continue to add more AI on the device. You're going to see a tremendous amount of growth in the requirements for memory and storage, but also you're going to see more sensors and more intelligence moving in, where the AI engine not only sits within the SoC, but even in areas like connectivity, you're going to see a lot more intelligence move there. Companies like Qualcomm over the last couple of design cycles have introduced a sensor hub, and that manages a lot of these sensors and manages the security of some of these devices, and you're going to see more intelligence move to that subsystem within the phone, and that will drive more semiconductor content overall. I talked a little bit about this earlier, but we're seeing a good recovery with the introduction of Wi-Fi 7 in the market. We're going to start seeing a replacement cycle in access points, in broadband equipment, in fixed wireless access as well. Some of these markets are definitely seeing a lot of design activity and will drive very good growth overall. And again, we're at IDC, we're tracking about 70 to 80 of these markets from a semiconductor standpoint, but what I wanted to show you here are just some of the system markets with a TAM that is greater than $5 billion overall. So it includes things like smart TV or wearables, but you can sort of see how the growth is progressing throughout the next couple of years. Shifting gears, and I wanted to bring this up because I think the memory recovery is a big story, I think, for this year. And so you can sort of see what happened last year and the cycles that we've seen and the jump that we're now seeing and expecting. We're expecting that DRAM will definitely recover by about 55.6%, and NAND will also see a strong recovery. Actually, the numbers continue to improve as we still look at sustainable pricing in this space. We're going to see likely stronger numbers as we look at the second half of the year, but you can sort of see where we're ending up in 26 and 27. As we get closer to the end of the decade, the memory market will get closer and closer to about $200 billion just on its own. And I wanted to show you the next slide just because you sort of see these jumps in these numbers, but the next slide is really to illustrate just the up cycles and the down cycles that we always continue to see in the memory space, even though we've seen a tremendous amount of consolidation over the last two decades in this space. And as we look at this now, you can clearly see the up cycle that we're seeing into 24 and 25, and it even goes into 2026 for this space. A lot of it really driven by what's happening now in 24. We definitely think that the data center is a big part of it, but also the infusion of AI in laptops and in smartphones will be very important because it's going to drive a lot more memory to be able to run any of these models directly on these devices. And so we're going to continue to see that level of growth. If you look at the following slide, I think this is an important chart to illustrate because this is behind a lot of the price appreciation that we're seeing now. This chart illustrates the worldwide DRAM dollars per gigabit trends and our outlook for this space, but this is more of a short-term outlook. But I wanted to show you that over the last year, since probably the third quarter, we started seeing that the suppliers were falling below profitability targets, and if we looked at the data closely in Q3 and Q4 of last year, these companies were losing money and operating at cash costs, and this is one of the key reasons that's driving the industry now higher, because these companies could not continue at these levels without operationally changing or restructuring the industry as a whole. So this is why we think that some of the pricing will remain sustainable, and we need to get to the point where we saw profitability back in the Q1, Q2 timeframe of 22 to get these companies to begin to start spending again on next generation tools and equipment. So for now, what we're seeing is that the memory companies continue to contain their supply and raise ASPs and position themselves for some of the markets that are in demand, especially in the AI sector. And this is what we're seeing for DRAM. The NAND one is very similar as well, where you can see this slide here is showing the NAND dollars per gigabyte trends and forecasts. And this is more of a longer term one, but you can sort of see what the normalized erosion rate typically is for ASPs and what it's been on a year-over-year basis, given the correction that we saw last year, and how these companies are now trying to get back to a point where they're able to sustainably remain viable as suppliers in the space, and of course more profitable as a result of it. So I wanted to show you this because this analysis is really what drives our outlook of the memory market, and one of the reasons why we're very bullish and the impact that it has to our top line semiconductor numbers. Shifting gears, I wanted to talk about this. This data here comes from a monthly survey that IDC conducts called the Future Enterprise Resiliency and Spending Survey, but it's really meant to provide a pulse on what decision makers are doing in terms of their dollars for ICT spending. And so some of the questions that we're asking them, we're asking each of these folks, whether they're a CIO or a CTO, is what are they doing in terms of their organization, in terms of evaluating or using generative AI. And these numbers definitely have been changing as we've moved across 2023, but you can see that whatever the spending dollar turns out to be, there's clearly a big shift that's happening where the dollar is really going after and supporting the automation requirements, the operational efficiencies that these companies want to have. And if you look at this data, what it's showing on a worldwide basis is that 41% of the participants are telling us that they are investing significantly in generative AI and are establishing a plan to continue to invest in the infrastructure, which to me bodes well for companies like NVIDIA and AMD and Broadcom and others that are positioning themselves very strongly within the overall AI infrastructure space. 37% are doing some initial experimentation and testing of the models and trying to figure out what the proof of concept will be as they start setting their spending plans over the next 12 to 18 months. And only about 22% worldwide are developing a list of use cases, but not really making any significant investments in the technology at this point. But if you look at these numbers, they're pretty consistent across the regions, with North America being quite higher. And you can see that already in terms of the guidance that the hyperscalers have talked about in terms of their planned investments over the coming years on infrastructure. All the top 4 of them have all increased their spending, which I think again means a lot more silicon content going into infrastructure. If you look at it a little bit differently, and this is really meant to sort of show that we're clearly seeing some disruption, not just overall, but even within specific lines of business. So whether you're in finance or government and education or transportation or even retail, we're starting to hear from the pulse that we're taking that these users are already seeing a disruption in their business because of Gen AI, or they're expecting to see some of it now. And even if you combine that with what they expect to be a significant impact over the next 12 or 18 months, the combination of these three is really compelling, that every industry is definitely looking to invest in to catch up, and at the same time understanding that not only if they don't invest in AI, it definitely has an impact, a negative impact on their competitive position and operating model. So we're seeing a lot of this come out. This is an interesting survey that IDC is doing every single month. You should take a closer look at a lot of the data that's coming out from the survey. But what I wanted to point it out is this is sort of a precursor to showing you this slide. This is our current view of the semiconductor opportunity in terms of IT infrastructure and for AI. And so if you look at this, the light blue section is really what AI IT infrastructure silicon is. And you can see that our expectations are that market will reach about $117.5 billion this year, and by 2027 we're looking at about $194 billion. Now what we're capturing here is CPUs, GPUs, FPGAs, ASIC, analog and memory, and other semiconductor ICs that are supporting AI workloads across the data center and cloud infrastructure. So that covers servers and even storage systems, but also communications infrastructure like switches and routers, some of them that are also a part of the data center, and base stations as well. One of the things that we saw at the MWC show was really a clear focus by operators and infrastructure companies to infusing more AI across their workloads. So as we look at AI, a lot of the growth has been primarily in the data center, and specifically in doing AI training. I think the next leg of growth is really going to come as the network continues to virtualize. You're going to see a lot of big changes within the network infrastructure as well, and that's going to infuse a lot more AI opportunity. And that's one of the reasons why we've seen the tremendous amount of growth for NVIDIA and other companies like Broadcom in network infrastructure. If you look at their Mellanox division, that business is growing, and it's now closer to 13 to 15 billion in terms of operating revenue run rate. And a lot of that really has to be with the fact that we're seeing AI make its way into the workloads of networking infrastructure, and we continue to believe that will be an important driver moving forward. And then the next wave after that, we expect will begin to be silicon that goes into the edge and endpoints. And so this slide here again is our AI semiconductor view of infrastructure. It doesn't include silicon that is going into phones or that's going into PCs. If you start adding the combination of that, we're now talking about an industry that gets closer to about 300 billion in size and grows from that point as we get closer to the end of the decade. So as I start getting closer to my last couple of slides, I want to leave you with some recommendations and calls to action. I think our industry as a whole is going through, I believe, a super cycle in terms of opportunity and growth and innovation, which requires continued investment. And in certain sectors, there's been a lot of concern over geopolitics and a shifting of the supply chain. But I think that for us to continue to innovate and drive prosperity, we need to not compromise the models, the business and operating models that we've established over the last 60 years. We think that supply chains will need to remain interdependent. Even though we're now starting to see a bifurcation of the supply chains, we still think in order to really take advantage of the scale and the efficiencies, there needs to be some level of interdependency with some of these markets, and that's the way we're going to be able to address the growth and appetite for semiconductors that we continue to see. We believe that AI will be the next tectonic change for the industry as a whole. Not just today, we're seeing a lot of it in infrastructure, but over the next decade, we're going to see a lot more of it in our clients, in our pockets, in our hands. And that's going to be a big shift, and it's going to drive a tremendous amount of silicon. And we do believe that we get to $1 trillion as we go to 2031 or 2032. And a lot of that means, too, that we're going to probably have to invest double the rate that we're investing today. So today we invest about $80 billion a year in R&D. I think we're probably going to have to double that in the next, by the end of the decade, in order to achieve a $1 trillion semiconductor industry. And same for the tools as well. I think all of these chips are not only getting, are becoming more established in each of these different market segments, but they're a lot more complex. And so by the end of this forecast period, if you listen to Intel, if you listen to TSMC and others, they're expecting to be able to pack 1 trillion transistors in large chips by the end of the decade. And that will require definitely a lot more materials and advanced packaging to be able to achieve that goal and vision. And finally, I think as we look at this space, it's very clear that the opportunity is in front of us. I'm very, with conviction, I believe that we're in a very good cycle moving forward in the next couple of years. But at the same time, in order for us to really continue to innovate, we need to continue to invest in the talent that enables access to the IP and the tools and materials and design and process to drive this market forward. And so from this point, I would like to turn it over to my team here and open it up for questions. Thank you.
Thank you very much for that presentation, Mario. So we will now be moving on to the Q&A portion of this webinar. A gentle reminder to everyone that you can ask your questions through the Q&A widget on the left side of your screen. If we aren't able to address all your questions live today due to time limitations, don't worry, we will get back to you via email with a written response. So our first question for today is, what's actually new behind AI PCs and AI smartphones? These two categories have gotten a lot of hype and attention in recent months, but these devices have already had AI applications before the hype train via things like software, voice assistants, and camera enhancements. So what's actually new?
I think what's going to be new is going to be the fact that we might be running 3 to 5 large language models, or at least condensed large language models directly on the device. So whether or not the device is connected to the internet or not, we're going to be able to do computing. And I think it'll change the way we engage with these devices too. Now, for a long time, we've been so accustomed to using keyboards, and I think we're going to start moving more and more to using natural language communication with our devices. And I think it also will change the way we search. When we do a search now on Alexa for our speakers at home, or even on our phones with Siri, it still has to go to the cloud to get us an answer. But imagine having that capability directly on the device. I think that really changes the dynamic. It enables us to take advantage of the low latency and the response time, so that we don't have to wait for a response from the cloud, but now we can get an immediate response when we ask it. And I think what's also important to point out as you infuse AI into these devices, the devices themselves will continue to learn more about you. Today our smartphone knows our location, and you can predict with very good accuracy what our daily routine will be. Now imagine if now you can automate and create an assistant for you where you prioritize the emails or who you have to get back to. If you're in a specific meeting, and now inside of the meeting you don't have to worry about note taking, because as soon as you leave that room, you get a summary of the action items from that meeting. So there's going to be many ways that we haven't even thought about in terms of how we automate some of the tasks that today we find very mundane and tedious. And I think some of those things will become a lot easier over time. Now, this is not going to be something that occurs over the next year. I think it's going to take some time, but I do believe that some of those things are going to be what drives this overall.
Thank you, Mario. Our next question is, how much progress do you expect China to make this year in developing advanced chips, and why?
Well, China continues to outspend every other region today in terms of capital investment. So clearly, you're going to continue to see them innovate, at least in the areas where they can. And I think that what I want to remind everyone is that even though a lot of the leading edge is outside of China, when you open up a flagship smartphone or you look inside of the hood of a vehicle, over 70% of the silicon inside of these devices and systems is still using mature and mainstream technology. So that means that many of those systems are using 28 nanometer, 40 nanometer, 55 nanometer, and older technology. So there's plenty of room for China to continue to grow in this space without touching, 5 nanometer or below. Now that said, I do believe that, China this past year did show us through Huawei and SMIC that they can definitely build chips with 7 nanometer capability. And I think that I won't be surprised with the same tools, they might be able to introduce a 5 nanometer chip maybe in the next year and a half or so, or even sooner than that. But it's going to continue to get more challenging to go below that, just because you're going to need not just the tools like lithography, but you're also going to need the software tools, the EDA capabilities, in order to be able to simulate the density and complexity of that type of silicon. So I think that there are some challenges ahead when you start going to 5 nanometer and below for China, but for the next decade or so, because China is the largest PC market and the largest phone market and infrastructure and automotive, you name it, it's still going to be an important area that every player has to continue to participate in, and that will influence the use of technology in that region.
Thank you, Mario. So shifting gears now to be a bit more specific, we have a question here. For 5G phones, how can the ex-memory growth reach 29% in 2024? What's the reason behind that?
Okay, are we talking on a specific slide?
There was no indication here in the question, but perhaps you could just speak broadly about 5G phones and the growth and the drivers for that one instead.
When we migrated from 4G to 5G, we definitely saw an improvement, in some cases a 2x improvement in the semiconductor content. I think as we think about the types of, of language models that are going to reside on our phone and that we're going to be running directly on the device, we cannot do these models on 8 gigabytes of DRAM. The minimum requirement will probably be somewhere in the 16 gigabyte range, and more than likely you're going to see 32 gigabytes of DRAM being the optimal way of being able to take advantage of these models directly on the device. So I think when you look at that and you look at the fact that some of these phones now, I mean, if I carry a couple phones with me and both of them have 128 gigabytes of memory, my next phone will probably have half a terabyte, maybe a terabyte of memory overall. Keep in mind that the memory market, ASPs declined by over 50%, which means you can double the memory and not really impact the BOM. And we're in sort of that position at this point. So I think the language models themselves will drive a different requirement if you're going to be using AI on these devices, and that will increase the BOM, at least the footprint of memory, specifically DRAM, but over time storage as well. And I think that's the main driver that we're seeing for this space.
Got it. Thank you, Mario. And sticking with the AI smartphones and AI PCs theme, our next question is, would infusing AI into the smartphones and PCs push up the cost beyond the proposition of new use cases?
Not necessarily. I think that the costs are going to be taken out somewhere else, right? I mean, we've done a lot to be able to move folks to 5G, where we've extended the payment terms. Instead of 2 or 3 years, now it's 4 years in some cases. So there's always going to be a unique way for operators and service providers to figure out a way to make these devices more affordable. But I think that you're going to definitely need these devices to be able to run some of these applications, and some of this stuff will trickle down. So some of the flagship phones today are going to be what's going to primarily be running these models. But next year at this time, you're probably going to see some mainstream phones being able to do that. Same with PCs. Intel just introduced Meteor Lake in December, and by the second half of this year, they're going to be introducing Lunar Lake. So you can expect that Meteor Lake will probably make its way into some of the mid-range devices. Instead of selling for $1,000 like you're seeing today, maybe those devices start selling for $599 or $500 but you're still going to have enabled PCs that have some AI capability. So this technology will continue to trickle down until it becomes more and more affordable. Now, on the data center, it's completely different. I think that's going to take some time until you see more competition against NVIDIA. NVIDIA will continue to enjoy the nice ASPs that they're enjoying today.
Thank you, Mario. Since you mentioned NVIDIA, we have a question here that's specific to that. As NVIDIA just delivered its record high revenue for FY24, do you think GPUs will replace CPUs to be the biggest logistical component in the semiconductor market for 2024?
NVIDIA has become the largest semiconductor company today, and so we've already seen that. I do believe that AI silicon and the data center and infrastructure that we're seeing will become the largest market, and I do believe at this point in time, at least for the next couple of years, NVIDIA will definitely benefit the most from it. You will see AMD gain some traction. I think they've guided already with a $3.5 billion revenue target for their GPUs. And so, you'll see NVIDIA seed some of that, but I don't expect anyone to displace NVIDIA. And, at the current run rate that we're seeing NVIDIA go, this company could easily probably achieve record revenues that no other semiconductor company has achieved this year.
Thank you, Mario. I have another question here, shifting gears a little bit, looking more to the data center side. What are the key ways to reduce energy consumption, eyeing on higher computing power demand?
I think it's creating silicon that definitely is a lot lower and more efficient per watt is one way. Eliminating the need of large systems and condensing the system. So instead of using 10 servers to do the task that you're doing, maybe you're using 1 or 2 of them. That will definitely lower the power. Finding ways to cool these systems is also important. In technologies that people are evaluating there, I think will be more critical. But at the end of the day, it's also being able to move some of these workloads, especially the inferencing part, directly to the endpoints. I think the more we see that shift, I think the better it's going to be on the use of power over time.
Thank you, Mario. Another question that we have here is, do you have a forecast on the ratio between AI training versus AI inferencing looking ahead?
Not this. I can follow up with you on that. Just to give you some guidance, if you look at what NVIDIA is doing today, and you look at their revenues, I would say that, about 65 to 70% of what they're doing today is training, and surprisingly, close to 40% of what they're doing is inferencing. So that's primarily happening in the data center. So we're already seeing inferencing. If you look at what Intel does with Xeon in the data center, they also do quite a bit of inferencing as well. So inferencing is happening, and that's kind of the mix that you see in the data center. I think as we move out beyond the data center, you start getting into the edge. I think the edge, you're going to see a combination of both of some training, not really heavy training. I think that will continue to live in the cloud, but you will do some organization and management of some of the nodes within edge infrastructure. Think of IoT gateways that are more intelligent, or mobile edge compute devices, or even these embedded servers that we're now starting to see that sit next to an antenna for a service provider. Some of those types of boxes will definitely do more training and inferencing at the same time. But ultimately, the training really begins to take off as we start seeing the intelligence move to the endpoints, and all of those devices not only are infused with AI engines, but now can do more inferencing at the endpoint level or closest to the customer, where the data is being created.
Thank you, Mario. Our next few questions will be more about geographies. So we have here a question about how should we look about the future landscape of the semiconductor industry? Will it be further decentralized from the past global cooperation?
I'm assuming that when you say decentralized, you're talking really about the supply chain or how we operate directly with customers. I think that companies are going to continue to try to find ways to engage with the customer base that they currently have. I mean, I don't think it makes ultimate sense for U.S. companies to dislodge themselves from some of the largest customers in China. So they're going to try to figure out a way where they can continue to support and serve some of these customers. I think companies like Intel and Qualcomm have done that pretty good, given their size and given the exposure that they have in China. I think the challenge, though, is that we're trying to recreate the wheel in Europe and in the U.S. and also in Japan. And in some ways, we'll be successful in some areas, and not so successful in others. I think areas like OSAT and packaging and materials, a lot of those markets live today and are grown strongly in the Asia Pacific region. And I still find it very hard to be able to move some of those markets completely over to some of the other regions. So I think the manufacturing piece, for strategic reasons, you will see some shift, but it doesn't mean that Taiwan or Korea will not continue to lead 5 to 7 years from now. It just means that these other regions now will participate in some of the leading edge manufacturing.
Thank you, Mario. We have here another question specific to India, and their question is, how does the India semiconductor growth story look like? Is it just hype or is it real?
Well, I think India will definitely begin to spend in this space. You're starting to see some announcements in that area, but investing $10 to $15 billion is a really small drop in a bucket. And I think that the commitment has to be more longer term and sustainable. They have to be able to address sustainability from an energy standpoint, being able to have access to water. I think from a market standpoint, they definitely are an interesting space because the population in India is young. They're definitely adopting a lot more technology. So from a demand standpoint, it's an ideal place to position yourself. But there's a lot more from an infrastructure that has to happen and commitments from big companies beyond just outsourcing of software and services, but really starting to outsource engineering and outsource manufacturing as well. So I think it's going to take some time. I think it's well beyond this decade before we start seeing some meaningful impact. If you were to ask me by 2030, where does India stand in terms of manufacturing compared to everyone else in the world, it probably will still be under 1%. And that's just based on investments that we're seeing over the next 3 to 4 years.
Thank you, Mario. Another question regarding geopolitics and geographies. How is the impact of Ukraine and Israel conflict impacting the semiconductor, and how is the mineral and other dependencies being resolved? Well, more of a supply chain question.
Yeah, so when you look at this from supply chain, we've seen the impact, mostly more of a perception and panic. I think most companies definitely had some excess amount of inventory, which they have been using. We're not seeing as much concern about substrates, for example, or wafers. I think it will change again once we start moving more and more towards chiplets and more towards advanced packaging, because you'll probably see a lot more demand for substrates there, and then you could see some growing concerns. But what we've seen is with the Ukraine war, a lot of the gases that were being produced from the byproducts of steel manufacturing, as an example, have moved to other regions already, specifically in China. And so China has been able to take advantage of some of that over the past couple of years since the war began. I think for the Israel and Gaza conflict, that's a little bit different. You're seeing that I mean, the operations in Israel have not stopped. I mean, Intel and other companies have facilities and engineers there. I think it's more of a personal level where it's for me it would be very hard to concentrate on working when you know that your country's at war. But we haven't seen any real disruption yet at this point for the pool of talent that exists within that region.
Thank you, Mario. Now moving back again more to the technological questions. What is the biggest bottleneck for running bigger AI models on the smartphone? When will we see phones that can run models with more than 13 billion parameters?
I think we have to continue to make progress on the MPUs that are focusing on being able to run these models on. You're not going to be able to run these models on a CPU. In some cases, we also have to get the applications more used to leveraging all these different architectures that we're incorporating into these devices. So today you open up a phone, you have a CPU, you have a GPU, and you have these NPUs, which are really DSPs. And the applications have to continue to evolve to be able to leverage what is best suited at that point in time. So in some cases, you might end up seeing a GPU run to be able to run that workload that you need computation, right? But then if you're looking for better efficiency per watt, then the application will naturally learn how to run on an NPU or DSP. And so I think there's a lot of work that has to be done there to optimize these architectures, and that just comes with time. I think just like we saw with NVIDIA in AI training, it's taken CUDA years to get to the point of sophistication and efficiency that we see today. And it just takes that amount of time, I think, that you're going to need to see with developers learning how to write and leverage the architectures that are within the system.
Thank you, Mario. Our next question is, what impact can be expected on HDDs and SSDs due to these AI semiconductors and the AI trend?
Well, you're going to store a lot more. I think today we store and copy and recopy many things. So I think when you start thinking about some of these large language models, and what's happening within your phone itself, your device is going to continue to learn, and they're going to have to store that learning somewhere. So I do see a gradual growth in the need for more storage within these devices because you're going to just be operating and using a lot more data. But I think where we're seeing the explosive growth continues to be primarily with hyperscalers and in the cloud infrastructure. That's where I think a lot of the HDD and SSD demand will continue to be a core part of the growth.
Thank you, Mario. We are now reaching close to the 1 hour mark, so the next question will be the final question. Again, if we weren't able to address your question live today, don't worry, we will be getting back to you post-event. So our last question for today is, do you see any challengers to NVIDIA's dominance in AI hardware in the short and long term? For example, AMD's MI300 series?
Oh, definitely. I think that, when you look at their position today, they're about 96% market share within AI training. And I think that just like Intel's experienced this in the last 3 to 4 years, some of that position probably has no way of going higher, so it probably likely go lower from competition. But I do believe AMD will be a real competitor. I think that as NVIDIA looks to extend its growth, a lot of that growth will come in networking. And I think the networking area already has a slew of competitors there with Broadcom and Qualcomm, Intel and AMD from the acquisition of Xilinx. So it's going to get more competitive the more NVIDIA moves outside of the data center. And as we start getting to endpoints, every major SoC supplier in Taiwan, in China, and in the US, all of those companies are all incorporating AI engines into their silicon. And they're going to make optimizations. They know some of the markets that they participate in, like in video surveillance or in computer vision for industrial applications. Some of these players have been in those markets and entrenched in those markets for a very long time. So they're going to have an inherent advantage. So think of companies like Infineon and NXP and ST Micro and Renesas, where these companies have been big in sectors like oil and gas and industrial automation. And I think some of those companies are also investing in ensuring that they have a position to play in those areas that they can control today with their existing business. And so you'll see those markets and those players become more competitive. So I see the competition only growing, and it'll grow as AI inferencing grows.
Thank you, Mario, for that engaging Q&A session. So that brings us to the end of today's webinar. If you would like a copy of the deck or would like to schedule a further one-on-one session with our analysts, please feel free to reach out to myself. You will receive a post-event survey after this call, asking you to rate today's presentation as well as indicate topics of interest for future discussions. So once again, thank you very much everyone for joining us today, and have a great day ahead.
Yeah, and thank you very much from my end as well. I appreciate your attention on this, and I'll make sure that we get back to the questions that I could not address. There's definitely a lot of questions here, and we'll make sure we get back to you. But thank you very much for giving us the time.
Thank you, everyone. Have a great day ahead.